Looking at Bitcoin since the halving of 2024, if we overlaid the 2012 cycle, the 2020 cycle, and the 2016 cycle, we saw that Bitcoin took off relatively quickly in the 2012 cycle. In the 2020 cycle, it was a little bit earlier than the 2016 cycle. So what we've seen recently is a degree of taking off. It was following the 2016 cycle quite well, but because of tariff wars globally, we've had a bit of a decrease in risk-on activity. But what are the candles telling us? Let's just zoom in there a bit. Taking price from a purely retail perspective, we could anticipate that Bitcoin is starting to turn around. At least the sell pressure is getting absorbed. The buyers are coming in and they're seeking to push the price up. If the price was pushed up from a retail perspective, we would expect a re-challenging of this 106, 127. If the sellers gain control, a push down to around that 88, 736 level. So the bulls are looking for 106, the bears are looking for 88.7. When people look from a retail perspective, they just anticipate a chart has no real resistance and no real support. After all, it's pretty much fresh air above there and absolute just decay below there, right? Well, maybe not. Well, actually, absolutely not. What you have is structural resistance and structural support levels playing out all the time in market action. They're not sheer drops down and they're not fresh air gaps up. You will hear people talk about price discovery. Please be careful of that concept. It is a retail concept and very, very misleading. In yesterday's video, we were just here and we said the two key levels to watch were the 98, 384 and the 94, 574 levels. As we enter the weekend, things can get a little bit choppy. They just tend to go sideways. And that's pretty much what we've seen, but that sideways action was above the 96,955 level that I spoke about yesterday. So we've got slight bullish momentum inside the market at the current time. And it may not seem like that if you just look through the heat map, but it's there. In order to understand where Bitcoin might be going in the next 24 hours from a bullish stance or a bearish stance, we need to also look at total crypto market cap. Total crypto market cap across the weekend has just been consolidating. But we need to look structurally. That's what it's literally all about. You need to uncover where smart money will be selling and smart money will be buying. And what do we notice here with total crypto market cap, which has been marked up in excess of 3,700 days worth of data? This particular structural resistance level around that $3.19 trillion level, that's been holding relatively strong. We did get above it, but we have not managed to hold it. We've got, unfortunately, the sellers coming in at the current time, but also the buyers are exerting their pressure and momentum. This is pretty common across the weekend. Now, what do we need to see done here? We need that 3.19 trillion to be overcome and to confirm above this level. What is that level? That's the 3.21 trillion. So we need to see price get above the 3.21 trillion to confirm bullish price momentum. What about bearish price momentum? If total crypto market cap gets below that 3.15 trillion, undersides retests and comes down, that's a bearish momentum. So bullish momentum above the 3.21 trillion, bearish momentum below 3.15. But how do you realistically read this across your price charts? Let's go back to Bitcoin. Before we do that, just bear in mind this 3.21 trillion, you can see that upper area there. Inside total crypto market cap structure, that upper area on Bitcoin is 97,946. So to get bullish price momentum inside the crypto market, total needs to break out from that level. And as well as that, Bitcoin needs to as well. But we're noticing here at 98,384, just around this level, there's structure that will play back in terms of total crypto market cap as well. This is a completely different way of reading structure inside the market, and it's incredibly valuable. Instead of just guessing where support and resistance levels could be, you know where they actually are. And then you can read between the charts to figure out what the key levels are that must be overcome to confirm bullish cases and bearish cases. Uncertainty is where you grow in life, and uncertainty is where you profit inside financial markets as well. Let's keep the analysis cooking on something like Ethereum. Ethereum, we saw a pretty good spike up, but then Bitcoin hit its own structural internal resistance and sold down. We can see that Ethereum has been weaker than Bitcoin, but it's all structurally based. If you know where the structure is, you're cooking with gas, because basically you can look at it and say, okay, what's ETH doing? When ETH rallied up through all of these structural resistance levels, it got stopped out at that 27.96 mark and sold down because Bitcoin did, and also total crypto market came down in response. This pulled down Ethereum, but Ethereum is always, like every single chart, structurally bound. It passed through this particular area of structural support around that 2749 area, did an underside retest which created negative structural attraction back to the 2707 mark, and then we saw it get range bound. But the sellers have been coming in and pushing Ethereum's price down. Therefore, what's actually wildly important is to be able to look through the charts just like what I showed you with total crypto market cap and Bitcoin, but also then to apply it to your charts. Therefore, for a bullish case momentum with ETH, we need to get above that 2707 mark. But remember, total crypto market cap around this level is going to give ETH a bit of a headache. And if we get across it, we would expect ETH to charge through this structural overhead resistance and make its way back to 2796. That's the bullish case. The bearish case is that we lose this 2700 level and make our way down to the 2655 and the 2645 levels. Remember what happens. Price is always moving in a wave. It's literally reflecting off structural support into structural resistance and vice versa. If the sellers get too strong, you will see a structural failure. And if the buyers are too strong, you'll see a structural rejection. We can see a little bit of weakness inside Ethereum's price chart. Definitely the buyers were in here pushing it up, but that does show a sign of weakness inside ETH. As always, keep your eyes on the structural levels. That's your key. What is XRP looking like? Well, when we look just at the naked price chart, it's really hard to understand where the structure is. But when we look structurally and when we mark up with level 1 and level 2 standard certification, it becomes a different criteria altogether. We can see that XRP just pushed through all of these sell levels, but sell levels are gravitational. Now, what does that mean? You can just get liquidated. For example, the shorts can get liquidated and that pushes the price up. But eventually the shorts come back in and seek to push the price back down. But unfortunately with XRP, there is a lot of structural support, so it's going to be really hard for the shorts to push it down. Also, there's a positive CTKS gap playing in on XRP's price. Now, what does that mean? It means literally there's a gap that can be filled to the upside. So if you're thinking about shorting XRP, please just be aware of this structure. If you were thinking of going long on XRP, there's quite a degree of underpinning structural support below XRP's current price, which is 274.24. One thing that I teach in all of the different classes, please use exact precision. Do not round up. You're not being greedy by paying more. Actually, that's like going into a store and saying, I'll have an avocado, and that avocado is $2, but you say, no, I'll pay $3. Why on earth would you do that? One thing that you'll see as you gain greater and greater insight into applying the CTKS method, and I do talk about this a lot in the profiting course, And there are still partial scholarships available, but you'll need to directly message me on LinkedIn, and that's going to close up very, very soon. This is where Bitcoin hit overhead structural resistance, just here. And this is the point on total crypto market cap, which is actually down. I'll go back to total and show you. Okay, this is what I mean. This area here is the one we're watching, that 3.21 trillion. Reading through charts is an expert level thing to do, but you can learn how to do it. Therefore, at this level of total crypto market cap, which is higher than XRP. Now, why is it higher? It's really simple. It's right in front of you. All of this structural support underneath XRP meant that instead of total coming down like this, it's been pushed up nearly, well, it's actually above that peak. I'll go back to total. This is a really important skill for you to get. On total, we see the entire crypto market come down and retrace from that peak. But XRP didn't retrace. It's like it's up here. So what you need to think about is how the strength of a different price chart is playing into total and to Bitcoin. So what is this telling us? Total crypto market cap would be around that 2.826 level in terms of XRP. So when we get positive momentum inside XRP and a breach of that 282.60 level, we could move very quickly up to the $3 level. And the good thing is that we have a lot of structural support underpinning XRP. Now remember, structural support is not a brick wall. It's a gravitational area. And when there's panic, either fear of missing out or fear, uncertainty, and doubt, prices will go through multiple safety nets before being caught and reflected back. Here, we went through multiple safety nets and were reflected back. This is normal. The CTKS method is a leading indicator of price, where price will go, where price will interact. Now, when I show you this kind of action on gold, let's just pop on the structural indicator. Oh, that's pretty damn interesting, isn't it? You've got all of this underpinning structural support and this structural overhead resistance, where we consolidated and then where we were reflected down from. This is not random price action. All price action is structurally bound. And then when we came back up to it, look at that. What are we looking at here? This 29.39 level and the 29.30 are key structural resistance levels on gold. If you know where the structure is, it's an absolute game changer. And if you would like to profit from CTKS method structure by applying it, please reach out to me directly, message me on LinkedIn. There are a number of partial scholarships in the making, but you're going to have to act really quickly because that's closing up. You'll be able to do so much from this profiting course, and you'll be able to look through the charts, which is a lifelong skill. Learn once, apply for a lifetime. There is so much to trading and investing. A lot of investors think that they simply can't time the market. This is rampantly untrue. If you know where the structure is, just think back to gold. If you know where the structure is, you know what things are doing. You know how everything is working together. If you can look through the charts, if you can read multiple charts at the same time, if you can read the cheat sheet and understand what different charts are telling you, wow, you are so ahead. It just means that you're making money because you know what you're doing. There's a lot of things to learn. It's going to take some work, and the profiting course is going to require effort and energy. You put your effort and energy into working hard to make the money. The least thing you can do is work hard enough to make good decisions in the market. If you treat it like a gamble, the house will always win. With life, so many people want to be like this little guy, the easy way, the instant money. If you talk to anybody successful, they'll say that this guy is going to have a lot of trouble getting there. Why is that? This little guy is just so slothful. He's just sitting on the couch watching Netflix. Well, that's good for Netflix, but not good for this little guy. The easy way is the path to failure. Unfortunately, it is. dreams of unlimited wealth, getting something for nothing. All of those things will keep people poor, not wealthy. Deep down, every single person knows that if you do the wrong thing, karma will get you in the end. Now, what is doing the wrong thing as far as your knowledge is concerned? One of the greatest errors that we can ever do is to be ignorant. Ignorant simply means just not knowing. That's it. When you're ignorant inside financial markets, when you don't know how they work, you're going to get a lot of problems. You'll literally lose your money. It's only the scammers that say you can do it risk-free. Scammers are always playing on people's laziness. Please do not get sucked in. There's no such thing as a free lunch. And we can see it in life. So many people don't do the right thing and it comes back to haunt them. Always do the right thing. It's cheaper in the long run. It does take a little bit of time to use rule number 1, which is only knowledge creates profit. You have to learn the rules of the game. It doesn't matter what game you're in, you need to know the rules. You need to understand what's going on. For example, if you're inside financial markets and you can't read between charts, you simply don't know the rules. Inside financial markets, if you don't know the rules, you will experience losses. That's rule 212. So each time you get a loss, just realize the market is trying to lovingly guide you through pain towards knowledge. The market is not against you, it never was. It just wants you to learn. Life is always waiting for you to be ready for abundance, but you must make the first step. The first step is always the same, no matter what area of life it is. You must know what you're doing. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And if you made it this far, please put something down in the comments about abundance. And you are awesome. See you next time.